I've invested pretty rationally, with my net worth being 99% Bitcoin until about 2021. That is not for the faint of heart. I think someone older might have had a heart attack.
How would you describe 2025 for Bitcoin so far?
I think people are feeling a little confused. They had high expectations, and what was delivered was lower than those expectations. Bitcoin has succeeded. It's $100,000 a Bitcoin. It's worth trillions of dollars. Mainstream is hard shilling it.
Meet Dan Held, on-chain voice, strategist and one of the sharpest minds in the Bitcoin ecosystem. From early growth at Kraken to advising founders, funds and institutions, Dan has seen the market move from every angle: retail, exchange and Wall Street. Today we are not asking if Bitcoin will go mainstream, but how it happens, who drives it and what most people still don't see coming. Dan believes the cycle isn't over, and today he explains why patience beats panic, strategy beats noise, and Bitcoin rewards the believers who zoom out. The Bitcoin community can be great, but also anti-everything.
I'm an ultra-libertarian capitalist, which means I'm very anti-government. Bitcoin succeeding means that eventually they adopt it. Cool, I'm glad you figured out what I figured out. Bitcoin will eventually stabilize in the millions, decades from now. Bitcoin should be boring. Our grandkids will be like, Grandpa, why would I want to hold Bitcoin?
That's going to be a good one in the history books. What's your view on the growth of that in 2025?
I think,
Before we continue, I would like to ask you for a favor. New Era Finance is designed and started to educate you about the future of finance. And I think that blockchain and Web3 is going to rebuild everything that we know about finance. And that's through those guests and the in-depth conversations that we have. However, more than 80% of you are watching this without being subscribed. And if we get more subscribers and more views, and we can start building this community, we can get better guests, we can improve the content, and we can start building. And in that way, we can start educating you even more. So I would like to ask you for a simple favor to check whether you are subscribed. And if you're not, please do, so we can start and continue to build this channel towards a bigger channel to help you all. Thank you very much and enjoy the episode. Dan, welcome to Amsterdam.
Thanks for having me.
How would you describe 2025 for Bitcoin so far?
I would say for a lot of people it felt confusing because most people were expecting this huge bull run, and Bitcoin, while it's performed well, I mean, folks forget just a few years ago Bitcoin was $15,000 a Bitcoin. Mm-hmm. So Bitcoin's up 6x since then. I think people are feeling a little confused. They had high expectations, and what was delivered was lower than those expectations. And it's funny, as I've been kind of on my own journey of just kind of self-exploration and self-journey on things, just in life in general. And one key finding I found was that happiness is derived from keeping your expectations lower. Mm-hmm. Because when your expectations are high for whatever reason, and they're not met, you're unhappy. Even though, let's say what you were met with expectations-wise was good. Let's say you want a hamburger, right? Mm-hmm. And your expectations are like, okay, it's a Wagyu burger, really nice hamburger, and it's like $50 hamburger. Your expectations are sky high. And let's say they deliver you a good burger, but it's not like the best burger. Then you're unhappy. But what's funny is you still got a good burger. So you're just unhappy because your expectations were high. Everything in life is about that. And I think expectations were very high in crypto in 2025. That Bitcoin would be $250,000, $500,000 of Bitcoin. And then the alts would follow. So a lot of people are feeling disillusioned. And what's funny is that Bitcoin's at $100,000 a Bitcoin. Mm-hmm. Or people are bearish in Bitcoin to six figures, which is kind of wild considering like I've been in this space 13 years. Yeah. And to see where we are now is incredible. We've got a lot of good things that have happened, from the president of the United States being on board with Bitcoin, pro-US regulatory environment, strong institutional adoption, Bitcoin ETF approvals, et cetera, et cetera. But yeah, I think people just, their expectations were really high and they felt like Bitcoin hasn't performed as well as they would have liked for it to have performed. I'm still very bullish, and I think this is a great setup for Bitcoin.
It's weird because if you walk on the streets right now, you ask a random person about Bitcoin, then one, they don't have any clue about the value of Bitcoin at this stage. And there seems to be no interest. While indeed, we are at like 105K at the moment of recording. And there's such a big disconnect between the institutional adoption and the retail interest. I've been to New York last week, and I went to SmartCon only, so that's kind of my reference. But all the institutions that are deploying time and energy and assets into this market, while whether or not it is Bitcoin or a different layer or a stable coin or whatever, there's so much happening that it's quite hard to stay, or it's quite hard to be bearish.
Yeah. I mean, if you were to tell me that Jamie Dimon, from JP Morgan, the CEO of JP Morgan, that he would be saying positive things about Bitcoin, that's wild. I mean, he was saying that like last week. You've got, top regulatory leaders, top TradFi leaders all speaking positively about Bitcoin. I waited my whole career in this space to see this happen. A lot of people, and by the way, I want to have a caveat. A lot of people say that this is like Bitcoin selling its soul. It's not that. It's the TradFi world bending the knee to Bitcoin. There's no code change that happened in Bitcoin to allow TradFi in. Bitcoin didn't change at all. They had to change for Bitcoin. To see this happen is tremendously important because it means that Bitcoin is infiltrating and being absorbed into the existing financial system. It's making change happen that way. And that's a huge deal. I think from an infrastructure and like base level of like how connected is Bitcoin to TradFi, how deep is liquidity, different instruments like futures and options, like how deep are those? Because those allow institutions to hedge and normal people to hedge. And we're seeing Bitcoin become a real asset class, like a real asset, which is incredible to see. I mean, Bitcoin has succeeded. Like this is
true.
Like, I don't know how many other success metrics you need for Bitcoin to say it succeeded. It's $100,000 a Bitcoin. It's worth trillions of dollars. And mainstream is hard shilling it. Mainstream bank CEOs are like, yeah, this is cool. This is innovative. This is useful. I mean, again, from my old perspective to see where we are now, like we have succeeded. The infrastructure side I think is critically important to answer your question. And whether or not retail has understood this or not, I don't think they're paying attention right now. They're, as you said, here and in New York and Austin, Texas and San Francisco, you don't walk around and don't hear the chatter. People at coffee shops talking about it. You don't have your friend from high school or university hit you up going, should I buy this coin or not? So this cycle was retail was absent from this cycle. And I think that's what makes it so different, is that it was kind of just a slow bleed upward of institutional adoption. At the same time, a lot of people were like, yeah, retail wasn't here, but retail buying in the ETFs were huge. We just didn't see that manifest into spot Bitcoin purchases, like, for example, Coinbase Kraken. And a lot of them didn't participate on Twitter and stuff, which is like our social network. So they were more like passive. New user acquisition occurred in Bitcoin with ETFs, where they just put in their 401k and they didn't care about the culture or anything else.
Yeah.
So there was some retail participation, just not the frothy retail participation that we've seen in previous cycles.
It's interesting because a lot of people are using success as a framework for their own return on the asset.
Right.
While not globally on the adoption of Bitcoin. And then on top of that, especially, Bitcoin Amsterdam is taking place right now. The Bitcoin community can be great, but also anti-everything. And I think it's a weakness if you do that, because Bitcoin in itself is the hardest money that we've ever had, the best way, it's digital. So if that is your fundamental thesis and TradFi comes in using Bitcoin, then you should be saying, hey, fine, everybody's going to use Bitcoin, so let's just explore instead of being anti-government or anti-institutions or whatever.
Right.
I don't get why Bitcoiners are so against it. Maybe you have been longer in space than me, so probably more experienced as well.
I mean, to kind of cut to the answer, like, I'm an ultra libertarian capitalist, which means I'm very anti-government. At the same time, if they're going to, Bitcoin succeeding means that eventually they adopt it.
Yeah, that's the
That's
whole
the whole
point.
point. Yeah. I mean, you can still have both mindsets. And it doesn't mean you have to be abrasive to them. You can simply be like, cool, I'm glad you figured out what I figured out. And I'm surprised you're not worried because this undermines the faith and authority of fiat currencies. But given that you guys aren't worried, great, awesome. Like, please, 10 years from now, this will be looked at one of the most strategic blunders in human history.
Which country was selling their Bitcoin at the low?
Germany.
Yeah. That's going to be a good one in the history books. But if we look at the last period, I mean, the 4-year cycle is taking place, or at least the 4-year cycle based on halvings is taking place. Price is doing its other thing. The past 2 months, we've had a government shutdown. And the government shutdown happened just when Bitcoin was breaking to a new all-time high. Is there any relevant impact on markets in the sense of a government shutdown? What I've heard is that the markets are quite illiquid during such a period. Traders are going to be a little bit more risk off, and we've seen that gold has been going vertical and Bitcoin has been dropping. In your opinion, what has been the impact of the government shutdown on the markets?
Bitcoin, for most of its existence, has traded as a risk-on asset. So it's been built like a risk-off asset. It's a harder digital gold, which gold trades like a risk-off asset, which means like if people are worried and concerned, they want to buy gold. If they're like, I have no worries about the future of the economy or the government, cool, risk on. Let's go put money in super risky stuff. Bitcoin, for most of its existence, has traded like a higher beta NASDAQ, like a much more risky asset, which is kind of funny because like inherently Bitcoin's been built, like I said, as a sound money, which when we're old, like when we're old, like in our 70s, 80s, Bitcoin should be boring. Our grandkids will be like, Grandpa, why would I want to hold Bitcoin? Everything else makes a lot higher return. Bitcoin will eventually stabilize in the millions decades from now and will be a true digital gold. And once it is that, that's when it transitions like the medium of exchange and unit of account currency aspects, where if that price is more stable in our fiat currencies, then we'll choose to price items in that. But that's decades from now.
Yeah.
And so I think, it's funny to, people are kind of like, I think the medium of exchange and unit of account era is too soon. A lot of people are like, oh yeah, people want to spend their Bitcoin.
They don't.
They don't. Bitcoin has to stabilize and be widely adopted and held first before people want to spend it. And I think that's going to take decades, but I do think, Bitcoin long-term will trade as a risk-off asset, where Bitcoin will be a boring asset to hold. And if you get worried, like gold this year performed up 40%, Bitcoin will trade like that. So, I think there was something that we talked about in London, but cycles won't stop. Like Bitcoin cycles might change, as in there may not be a 4-year cycle. There may be 2-year cycles. Bitcoin cycles may be more muted, maybe at 2x's or 3x's, but only drops 20%. What I do know is that humans don't change, and human beings aren't going to all of a sudden become rational and price in information accurately. They're going to be emotional about it. They're going to panic sell, FOMO buy, and that is what dictates cycles. Cycles still exist in TradFi. And if cycles still exist in TradFi over hundreds of years of equities existing, they're going to exist in Bitcoin in the future. Regarding gold and everything else, Bitcoin sold off with other risk-on assets when the government shut down because that's a risky thing that occurred. That's why gold went up. So Bitcoin, equities, et cetera, sold off. I do think with the resolution of that as of today, I think.
Last night.
Yeah, there should be more risk-on bid for more risk-on assets. So that should change shortly.
I mean, ultimately, I think you're right on that. I think gold is the ultimate risk-off, but it became sort of hype altcoin thing the past few weeks, where you saw lines going into banks or stores where you could buy gold. And our friends, they're just down the road, Gold Republic, have had their best times as a broker in gold. Congrats to them. But there is it's weird because the Nasdaq is also printing new all-time highs, and they continue to go up. But crypto in general is just lagging behind. And then the question is it lagging behind, or are we in a different set of stage or period for Bitcoin in general? Is it going to be more of a softer upwards period and all the big traders, influencers saying, yeah, it has been providing 130% API since the occurrence of Bitcoin.
Right.
That's going to go down by the growth of the asset, right?
Yeah.
Are we getting in that stage?
I think we're pretty far away from that stage. I mean, gold went up 40%.
Yeah, that's ridiculous.
And gold's a $15 trillion asset before that. No, I think it was, like a $15-20 trillion asset before it moved up. Mm-hmm. And now it's at like a 28 trillion. If gold can do that, then Bitcoin can too. True. And gold is boring and old versus Bitcoin is more speculative. So people inherently might bid it up even faster. So yeah, I think Bitcoin's returns will be diminishing relative to its earliest. I mean, going from 0 to 100,000, obviously it's not going to do the same sort of magnitude. It's not going to go up the same magnitude shift. But I do think, I think Bitcoin in the millions seems appropriately priced. Like that, then at $1.3 million of Bitcoin equals what gold's market cap is. Mm-hmm. But Bitcoin is much more valuable than gold. We know exactly how many units of it exist versus gold. We have no idea how much gold exists. We just have to guess. You can send it anywhere. It's like a true gold 2.0. And so, but gold had inherent problems where it's hard to transport, hard to divide it, hard to verify it. Bitcoin solves all those. And Bitcoin can also be used in DeFi, et cetera, to where that could unlock a whole bunch of different values. So I think Bitcoin will have a larger market cap than gold. So that's where I think $1 million seems appropriately priced for Bitcoin over the next decade or two. And longer term, I think in the millions makes more sense. I think some people remember this is in today's dollar value.
Yeah.
And we're quoting in dollars because dollars are the unit of account asset currently. So yeah, technically against dollars, Bitcoin will keep going up for forever, but like priced in today's dollars is basically my reference point here.
Would the entire topic change, in your opinion, if I saw a tweet earlier today that CZ is going to have debates with Peter Schiff in Dubai? I'm looking forward to that. But
nice.
It's going to be about Bitcoin versus tokenized gold. And the few things that you mentioned that Bitcoin has and gold doesn't have, that are the unique examples of money or unit of account. If gold becomes tokenized, then a lot of these things are ticked off. So is that going...
I wouldn't say
a lot
that
of things
exactly.
also not like ownership and all those things. But would the topic change a little when gold becomes tokenized versus Bitcoin?
Well, if you look at the different aspects of money, like what makes a good money, we have, the monetary policy, how hard it is to produce, like scarcity would be the monetary policy plus the production of the units. Gold has a costliness. It takes a lot of time to dig out gold and refine it. Mm-hmm. And that is not inherently what gives it value, but what prevents its supply from being overly diluted. Same with Bitcoin's proof of work. Proof of work doesn't give Bitcoin value. It simply ensures the costliness of production, which means that it represents that there's no just manufacturing of the units. Mm-hmm. And so when we look at the different other aspects, you have divisibility, transferability, et cetera. So tokenizing gold would solve your divisibility problem. You can easily divide. Maybe it has each gold unit is worth a penny or something, and then that way it's divisible. Transferable, yes. However, when it comes to the monetary policy and the ownership, when you transfer Bitcoin, you own it. You actually own the underlying asset. Tokenized gold means no ownership. What this means is a claim of ownership. It's like if you and I created a centralized server and I tokenized my watches, and I gave you a share of my watches. Well, how do you trust or redeem those shares of my watches? You have to trust me. And so whoever issues these gold tokens we'll have to trust whoever that is that the gold exists in physical, real life somewhere. So that is a pretty weak sort of layer of assumption. We can do that with any asset, right? We can tokenize equity, stocks, bond, we could cars, whatever. But we'll always have to rely on a real world counterparty to validate that that stuff actually exists and still there. Versus Bitcoin, we don't have to trust that anyone validates it. It's on chain. We can validate it with our own node, which costs $1 a month to run, super cheap validation. So in the validation standpoint, it doesn't solve validation. So like digital gold can't be validated, which kind of dilutes the entire premise of having a tokenized gold. If it's sort of like, it's not good or bad, it's more like a gold ETF.
Yeah.
Gold ETF is the same thing. There's gold somewhere that represents your shares. However, good luck. I mean, it's like in a crisis scenario, you really got to cross your fingers and hope, and Bitcoin kind of solves that. You don't have to cross your fingers or hope. You can hold it yourself.
I mean, tokenized gold has a purpose, like everything that's going to be tokenized, to increase efficiency, increase liquidity, be able to swap your assets around more easily. You don't need to go from platform A to a bank transfer to platform B. All those things, that's solved. So that's great. But essentially, it's the same with like this property. If you cut this in 100 pieces and you want to claim your 1%, it's impossible. So how are you going to do that? The gold bar is the same issue. On top of that, I think, I don't know exactly how the gold markets work, but if the gold price goes up, there is an incentive for more people to dig deeper and invest more to get more gold out of the planet, right?
And that's called a supply response.
Yeah.
In response to demand, more supply can be created. Whereas
Correct.
Bitcoin has no supply response. There's no incremental amount of Bitcoin produced.
True.
Bitcoin's issuance curve is set. How expensive it is to mine it is different. Like,
I mean, Bitcoin has the inverse, right?
that's what I'm saying, is that the difficulty adjustment ensures that Bitcoin's production curve stays constant. Like, we know how many Bitcoin are being, newly minted Bitcoin are going to be created per block for X number of blocks until a halving. I think it's 210,000 blocks. That's each halving cycle is, I think, 210,000 blocks. So even if Bitcoin went to $1 billion a coin tomorrow, we're not going to mine all the Bitcoin until the next halving. It would simply increase the amount of hashing power coming on the network. The Bitcoin network basically has the difficulty adjustment, which makes it more expensive to mine a Bitcoin. Basically, with gold, we don't have that. While it's more expensive to mine the gold, people are free to mine it, and so more supply can hit the market to satisfy demand. Whereas Bitcoin just makes it more expensive to mine a Bitcoin. It doesn't increase the supply curve issuance.
But then still, I think it was like, when did I hear it? A few months ago, the rumor or the discussion that started to fire up that there are not enough transactions on Bitcoins to make miners profitable. Like, at some point you will have the crossroads of, okay, you can mine a block of Bitcoin, but that's not going to be as profitable enough. So we need more transactions to actually make that business work.
There's some nuances here. One is it will always be profitable, because if it's not profitable, people will remove their hash rate from the network, and the difficulty adjustment will adjust lower, therefore enabling whoever survived, who has profitable machines, to make money.
Yeah.
So there's no such thing as no profit in that, because we're talking about we're talking about gross revenue essentially for the miners. That's more of what we're talking about. So for the revenue, the Bitcoin network rewards the miners with a block reward for mining a block. When you mine a block of Bitcoin, you get the newly minted Bitcoin is in there and transaction fees. And so what you're referring to is, over time, the newly minted Bitcoin, the number of newly minted Bitcoin drop through each halving, it halves. And then over time, the transaction fees need to replace that in order to compensate the miners equivalently, I think is a better way to phrase it, versus like profitability, because it will always be profitable. So with that, when we look, so there's a couple different nuances. One, the newly minted Bitcoin, while the halvings have occurred, the value per newly minted Bitcoin has gone up dramatically. So the Bitcoin total block reward in dollar value terms has never been higher, because Bitcoin's price is high. even if the number of Bitcoin per block is halved, each unit is worth a lot more. So the argument comes into effect when it's like decades from now, where the halving has somewhat become a little bit more asymptotic, where the reward is the newly minted Bitcoin is called the subsidy, by the way. The subsidy is small.
Mm-hmm.
Will transaction fees compensate to reward miners appropriately enough to protect the Bitcoin network? Basically, the Bitcoin network, how it functions is that miners are paid this block reward to behave properly. By behaving properly, that means organizing transactions sequentially in blocks, not trying to do 51% attacks, etc. So that the worry is that Bitcoin's game theory could break down in that scenario because the block reward of the newly minted Bitcoins, which are very few then, and let's say there's very little transaction fees, that won't be enough to compensate miners appropriately to prevent them from choosing to play other games of reorganizing transactions.
Mm-hmm.
There's a lot of different functions of how that could all play out, but I don't think that's a concern now. Bitcoin's block reward has never been higher in terms of dollar value, but decades from now, sure. That's also why I believe in Bitcoin DeFi, because DeFi on top of Bitcoin can stimulate transaction fees. It also makes digital gold even more productive. Digital gold is a great value prop, and I think that's 99% of why Bitcoin's valuable, but allowing you to borrow against it, using your Bitcoin as collateral, lending it out, earning a yield, and doing this all in a trustless manner is awesome. And that's what Bitcoin's made for. So I don't think it's not like DeFi or a store of value. It's more of DeFi amplifies store of value. But that's why I care so much about Bitcoin DeFi, is I looked at this problem too. In decades from now, we need to solve it, and more transaction fees from DeFi activities happening on Bitcoin, the more secure Bitcoin's future will be.
We're going to touch on Bitcoin DeFi in a little bit, but I think that's a good explanation. I mean, it's indeed not a problem for now, but at some point it will be. Talking about now, I think the prime discussion that you see on internet is the 4-year cycle. As I said somewhere in the beginning, it's not about the existence of the 4-year cycle in terms of miners and the halving and inflation of Bitcoin. It is all about the connection that people make in terms of price appreciation with it.
Right.
And that part is up for debate at this point. Is it connected to the supply and demand and the halving that is taking place, or is it just overlapping the liquidity cycles that a lot of other people are saying, and therefore more macroeconomic? So my question is then, to you, of course, does the 4-year cycle in terms of price appreciation connected to it actually exist, or are we connecting in a different way?
Well, cycles will always exist. Humans will like to speculate they'll become greedy and fearful, and that will always create cycles. So whether it follows Bitcoin's halving schedule or it follows the more traditional cycle is the question. This cycle's been different. It's the same but different. Remember, again, a couple of years ago, Bitcoin was $15,000 a Bitcoin. Now, granted, usually the cycle high is much higher than the last cycle high. Cycle high 2017 was $20,000 a Bitcoin. Cycle high in 2021 was 69,000. 69. It's a great number. 69,420. And so this cycle, at basically double that at $125,000 a Bitcoin would be, again, disappointing from an expectations perspective. I also do believe that Bitcoin's very undervalued. I'm super bullish on Bitcoin long term. And given the lack of trust in government, et cetera, I think personally, my kind of guess for this cycle is $250,000 would be the top. We haven't really seen a blow off top yet. We're defending $100,000 a Bitcoin price level pretty well. People are quite bearish right now, and Bitcoin's still about 100K. I mean, all it takes is just a little bit of macro, tailwinds to really kind of push this market up, and boom, Bitcoin could be at 125, 150K tomorrow. I think a lot of as a trader, as someone who's traded and who understands markets, it's when people are fearful, that's a good entry price. And I think right now, fundamentals look great for Bitcoin, infrastructure looks great. All we have to do is all we have to do is hope for, the whole budget crisis to kind of resolve in the U.S. inflation numbers to look good, and then we're probably okay. Like Bitcoin, then I think this is a good setup for the rest of the cycle. So TLDR, I don't think this is the top.
Well, I'm happy to hear that. But I think overall, also if you look in the broader scope of things, commodities have been going on a tear. Equities are still printing all-time highs. I mean, the risk of investing in Nvidia at this point is quite heavy. The downside is quite a lot, I think. Most of those valuations are ridiculous. And then you have crypto as an asset class, which doesn't move at all. The fact that gold has been going up so much has created a bigger market potentially for crypto. And then if you reference to, I think a lot of, or like some influencers or some people on social media are connecting it with the copper gold ratio or the business cycle. And if you use it in that metric, then Bitcoin is still extremely undervalued. And that we haven't seen any escape velocity at all.
Yeah, Bitcoin to NASDAQ pair or Bitcoin gold. Yeah, 100%. That's where a lot of people are like, oh, Bitcoin had its run. And I'm like, this would be a very abnormal cycle if this is the top.
True.
Because compared to other assets, it hasn't really performed that much. Compared to the dollar, sure, but like the dollar is kind of a shitty benchmark versus like equities.
It's depending on your reference. It's depending on your framework. And it's also understanding correctly what has happened. And if we go back to where Bitcoin came from, I think in 2023, before the ETF was approved, it was like 25, 30K. That's that period. And then it got approved. There was 60 billion of inflow until now. And that has resulted into the price being on a new floor. I think if the ETF wouldn't have been here, I think we wouldn't have seen a new all-time high, to be quite honest.
Yeah, I don't think so either. The ETF was huge news and had a bunch of inflow. I mean, it's the most successful ETF ever launched, ever.
Yeah.
In like the shortest duration ever. So it's not the biggest ETF yet, but it's the most successful from its inception to now. And it's on track too to be probably the most successful ETF of all time, like IBIT and these ETFs. So yeah, I agree with you. Like that was a huge moment that we've been waiting for, and I don't think we'd be at all-time highs without that.
Yeah.
I guess the more important question would be how influential are the treasury companies on Bitcoin's price, which is scary.
It's actually, I wanted to bring up this topic next.
I'm sure you were going to, yeah.
Yeah, I mean, we talked about this in London. There are controversial thoughts on that. It is, on the one hand, it's great. On the other hand, it's not. The reason for that is that it's great that companies are actively seeking to add spot Bitcoin or an ETF product to their balance sheet. That's great. But then you have all sorts of mania people that are expecting to get a big return out of this, issue a lot of debt, buy Bitcoin at higher valuations, go underwater. But that's also a treasury company. What's your view on the growth of that in 2025?
One is I agree with you. I think it's a good thing if normal companies want to add Bitcoin in their balance sheet. It's great to see, like a Tesla or SpaceX or Apple or Google. I think that's phenomenal. I think that would be a much more sustainable and long-term good narrative for Bitcoin. A lot of these treasury companies are basically a leveraged position on Bitcoin where they're issuing debt or equity to purchase more Bitcoin. And so when you buy a share of that treasury company, that represents a levered bet on Bitcoin. That comes with operational risk of the debt. That comes with all these other caveats. I do think as a product for retail likes it because of that. It's simple. Retail, could also buy call options like on IBIT, or they could borrow against their Bitcoin. I forget what the brokerage's margin position is right now on this, but hypothetically, you could borrow against your Bitcoin and buy more Bitcoin. You could manage your own margin position. That's what I'm trying to say. Retail, they like simple things, so just one-click buying a DAT that they find interesting is easier to manage their margin position. Also, these DATs, for example, MicroStrategy, they've got really long duration convertible notes. to where they could withstand a cycle and not get margin called. So there are some aspects of that that make it a different margin product than like traditional margin products. You know, I'm not going to be an advocate for margin positions or leverage positions on Bitcoin. I think Bitcoin's a highly volatile asset, even though it hasn't felt like that the last year. When things move, you know, weird things can happen where Bitcoin drops 20% tomorrow. Do some of these DATs blow up? Do some not? Strategy is going to be okay. MicroStrategies, they're going to be fine. They're really early on this treasury play, and they've got really good, financing terms. Everyone else, to attract capital, has had to go out further on the risk curve, and those will have some issues if the market price drops suddenly, or if it just stays flat. Some of these could have issues if Bitcoin's price stays flat because they have to pay debt. They have to pay an interest rate on the debt, or some of their lenders might have some kind of egregious dilution terms, et cetera, et cetera. So yeah, call me old-fashioned, but if you want to buy Bitcoin, just buy Bitcoin. And if you want to manage your own leveraged position, I would just recommend, borrowing against your Bitcoin using it as collateral to buy more Bitcoin, or buy a call option. Again, I'm not recommending this. Just buy Bitcoin spot and hodl. It's a phenomenal return, over its existence. You're going to be stressed out if you have to manage a leveraged position. And so, yeah, my advice is just buy spot Bitcoin.
I mean, having leveraged positions is usually fueled by greed, and greed comes from fear. That's technically the steps that are before you go into the leverage position. And I think you mentioned a market crash. Well, we've had a few. We had one in October, the 10th, which was, if you were in altcoins, a quite ridiculous day.
Oh yeah, that was nuts.
We, as a fund, we have been trading the markets. We are a volatility high frequency firm. So essentially those wicks were great, but of course way deeper than our models have predicted. So we had to do some more trading. But during those periods, if you had leveraged positions, you got confirmed by something called ADL, which nobody understood before that. If you had a market neutral position, or if you have a position that's long and short and you get the funding rate, you got squeezed out too. So a lot of people start to understand that everywhere you go, there's risk.
Of course, yeah.
And I think you see a lot of products coming out right now with stablecoins having yield, that's having yield, or activation of a lot of Bitcoin DeFi, which we talk about in a little bit. You give the conclusion of, okay, hey, you should be buying spot Bitcoin yourself and simply holding it. However, that provides another disconnect, which I referenced Sergey. He said, even DeFi or crypto people don't understand DeFi, which means looping the entire collateral that you have to generate a higher return.
Yeah.
And that is a lot of institutions are buying debts or investing in debts and buying ETFs to loop it around to generate a better return or have more liquidity, which retail people that should buy spot Bitcoin do not understand.
Mm-hmm.
So what I wanted to ask is if Bitcoin people are listening and they are pro self-custody, what would you tell them when it comes to all the institutions buying ETFs, buying debts, setting up debts, as a contrary to the
You're just
belief?
talking kind of what are my thoughts on yield in general too, or?
Yeah.
So Juthika Chow, who was a former Goldman Sachs derivatives trader, started LedgerX, the first options platform for Bitcoin, and used to head up Kraken's derivative OTC desk. She has a really great quote on this, which is that all yield is simply monetizing a tail risk event, which is actually quite poetic. The idea that every type of yield is simply monetizing some fail state eventually. Mm-hmm. And it's really helped me reframe my relationship with any sort of yield I generate across T-bills, Bitcoin yields, bonds. And you realize you're actually all yield is that. It's just simply, it's compensating you for a risk event. Mm-hmm. If the risk was zero, then why would they have to pay you anything? Now, with traditional world, you have operational risk, and that's what that yield comes from. So, for example, a bond is representative of the going concern risk of a company. Like if Coca-Cola defaults on this bond, how much do I have to get compensated for that? That's why when a company is about to default, the yields go super high up on their bonds to compensate the lenders. But when it comes to DeFi yield, a lot of people don't respect this. And the yield isn't just representative. So with DeFi, you've removed counterparty risk for the most part, but you've introduced something else, which is protocol risk. So it's the protocol having a zero-day exploit. It's some unknown factor that could lead to cross-asset collateralization where that all degrades quite poorly. Basically, you're being compensated for risk, and risk is something you can't see. Mm-hmm. It sometimes just happens. And so a lot of this yield in DeFi is representative of protocol risk, where the protocol itself could have flaws in it. You could lose 100% of your principal. So it's not risk-free. Mm-hmm. And I think in a future state, maybe 30, 40 years from now, as DeFi protocols mature, as we game theoretically make them more and more sound, we will have to worry about those game theoretic attacks less. But there was just one recently. Was it Balancer?
Yeah, I think it was 100 million.
Yeah, and these happen semi-frequently.
It wasn't the first time with Balancer, by the way.
Oh, really?
Yeah, I think it was the fourth or fifth one that it happened. At least I've been told before someone is going to slam me for this.
Right. Yeah, in the comments. Yeah.
But I think that's the whole point. Like Bitcoin DeFi or DeFi is the future of finance. I think in a few years we will not be calling it DeFi anymore. For instance, if you are JP Morgan, they have their own chain, Connexus. It's a private chain that communicates with public chains. So whatever it is, it's on chain. But it's all about trust, and a protocol, you trust the protocol when it executes 100% of the time. Mm-hmm. That's the prime reason why Bitcoin became so big. That's also the reason why Ethereum is still being used as the prime smart contract layer. Solana has had their issues back in the years. So is that going to impact institutions coming on chain if there are still those exploits taking place and still some, defaults here and there?
Oh, for sure. Yeah, and I think a lot of crypto folks like to brush that under the rug, but institutions aren't that dumb. Like they know this stuff is going on. They're going to have internal audit teams look through how this contract is constructed on chain, and they're going to have all sorts of concerns about it. I think there's institutions are dipping their toes into DeFi, but they're not nearly as deep in. I mean, they like nice, safe products where, it's custodied, then that is put into an ETF wrapper, and then people can go trade that. Like CME, with futures and options, there's all sorts of like very structured ways that they've entered the space, but DeFi is like the Wild West. Mm-hmm. Now, is that the future? Totally agree. Hence why I'm investing in the category. And I think we all saw like Ethereum DeFi summer in 2020, and we're like, this is cool. This is interesting. It's Wild West. Pretty risky, but interesting. So yeah, I think the institutions are going to they're always late to come into a sector. So in the DeFi world, some are dipping their toes in it. I know folks like, some of the big names are getting in a little bit, but like JP Morgan deploying capital into smart contracts, probably 5-10 years away from that. Mm-hmm. But I think, like Jane Street or Jump? Mm-hmm. Like Jump deployed capital into Bitcoin, or not Bitcoin, but into DeFi pretty early on. They also got burned too, I think, in the wormhole hack. I forget. This is some old stuff from last cycle that I haven't thought about in a while.
If I recall everything that has been happening, it's I will look back at these years as indeed the Wild West. It's crazy.
Indeed.
But the bigger parties like what's it called? Goldman Sachs and some other ones have also invested into layers like Canton. At least they are not investing into them, but they are partnered. So you see that they are testing it out after the Genius Act to be like, okay, what is this? How can we use it? How can we leverage it? But then before they adopt it, it takes a whole bunch of time.
They're also like, how do I make money with this?
Yeah.
And that's a little bit tricky with some of these public blockchains. Like, that's why, what's it, with Stripe, didn't they come up with their own blockchain?
Stablecoin, right?
Or stablecoin, yeah. Yeah, stablecoins, which chain will they be issued on?
I think Sui has announced it now.
Okay, gotcha.
There's a stablecoin issued by stablecoin on Sui, and that's a Stripe company.
Gotcha. Yeah, so there's going to be a whole battle on where stablecoins and centralized assets will be issued on. Because stablecoins are centralized assets. There's a central issuer that can totally pause them, freeze it. They have to, they control the real world version of it. So we'll kind of see how big seeing the big banks use their political capital on picking winners here will be interesting.
What is, if we talk about Bitcoin DeFi, I think for the past 10 years, the ecosystem has tried to build a layer 2 on top of Bitcoin. Lightning, Taproot, all sorts of protocols. But what are the key concepts of Bitcoin DeFi, in your opinion?
Yeah, okay. Say there's like 4 sectors within it, or kind of like 4 categories that we look at. Layer 2s. Easy one for almost everyone to get. Layer 2s on Ethereum. There's layer 2s on Bitcoin. Same. Different ways that they connect to the Bitcoin base layer, but same concept. Then you have staking protocols like Babylon and Lombard, where you use Bitcoin and you use it as staked collateral on other chains, which is pretty cool. It's the idea that like Bitcoin being the best asset in the space could be used to protect your proof of stake network instead of the native currency. It's probably better game theoretically to do that. But then it gets Bitcoin another use as digital gold. It's like digital gold in a bank vault that represents security for something else, and you're compensated for that. So it's like yielding protocols, or I would say like staking protocols is a better way to phrase it. Then you have meta protocols. Meta protocols are like ordinals. So technically ordinals aren't a layer 2 because the activity is all on Bitcoin base layer. The way to help people understand what I'm talking about, though, because it's a weird concept, is that how ordinals work, or meta protocols, it's the idea that the Bitcoin base layer doesn't change at all. Things are moving on the Bitcoin base layer, but you and I are wearing augmented reality glasses, which is called indexing software. And so you and I look at the chain, and while everyone else sees transaction A, transaction from person A to person B, you and I, given the augmented reality glasses, and we're running the same set of software, we interpret that transaction as not just a Bitcoin transaction, but also that you and I bought and sold an NFT, which is really cool, and it's never been done before on any other blockchain. It was theorized, called colored coins on Bitcoin a decade ago. And so that's really cool. We're big investors in meta protocols as well, because we think that, is it ordinals? Is it, the ordinal, is it ordinals? Is it, within ordinals, you have like BRC20, you have runes, alkanes. Is it going to be that? So we have positions in that category as well. We think that's very underappreciated. And we think people on the base layer are just easier to transact if you don't have to use an L2. So we believe that both will have adoption. And as transaction fees rise in the layer 1 will only be used for high value transactions, whether that be NFTs or Bitcoin transactions itself. And those transactions will be pushed to layer 2s. So we still think in this world they both win. There's activity on both. It just depends on the value of your transaction. And then, of course, to power all this or to make it worthwhile are dApps, decentralized applications on the Bitcoin base layer, or L2s. A lot of these L2s are EVM, so copy paste your Ethereum dApp over. For Bitcoin layer 1, it's much harder to work with, but we've got things like DEXs, which are mainly post-only limit orders. So it's a primitive DEX, but it still works. Like that, we have the ability to borrow against your ordinal or the ability to borrow against your ordinal, borrow Bitcoin using your ordinal as collateral that exists on the Bitcoin base layer using discrete log contracts. So the Bitcoin base layer can do some things. I think a lot of people think that it can do nothing. There's some very primitive smart contracting capabilities. So there's dApps on the base layer, very few. and there's a ton of dApps in the L2s, and those are what make it all worthwhile. Those are what people interact with. So when we think about Bitcoin DeFi, that's kind of broadly, I think, encapsulates most of the space.
I think, well, DeFi in itself is the biggest in the space, but Bitcoin is the biggest market, but also the most complex one to get it going. I mean, from my understanding, in order to get a big sort of escape velocity when it comes to Bitcoin DeFi, you need to have a good layer 2 getting all the attraction and network effect.
Right.
Because the layer 1 is so expensive and so slow. Basically, Ethereum back in 2020 with the gas fees and all those things, right?
Well, it's pretty cheap now, but it depends on the era. Yeah.
But a lot of things have changed within Ethereum.
Sure.
And for Bitcoin, it is, in my opinion, not designed to have tons of dApps on it to execute all those things. That is probably better to do it on a layer 2.
Agreed.
But why is it so hard to build a layer 2 that does the fast settlement and increase scalability?
Most of the layer 2s are quite adaptable. So it depends on which layer 2 you're talking about, because like Lightning is a very primitive layer that just is mainly utilizing Bitcoin for transactions to reduce fees. Now there's like Taproot assets, which operate on Lightning, which are, tokenization of various sort of things. But when you look at Bitcoin L2s, they can be extremely modern sort of blockchain design, like EVM, et cetera. So L2s can do almost anything. Bitcoin L2s can do anything Solana or Ethereum can do, basically. And so, they're really no different in terms of capabilities. But if you're talking about early Bitcoin L2s, early or ones that there's all sorts of ways to build L2s. You got EVM L2s. You've got side chains. You've got a side chain, for example, Rootstock and Liquid are side chains.
Yeah.
And Rootstock is EVM. And then you have things like Lightning, which are state channels. So a little bit more primitive, but very much more connected to the base layer. And you have like BitVM, so there's a different way. There's all sorts of different ways to architect Bitcoin L2s, but with sidechains or BitVM, you've got L2s that are usually like EVM compatible. So, so like they're pretty expressive.
I think the trying to make the point that in terms of amount of transactions and in terms of activity, Solana and Ethereum are significantly bigger than the Bitcoin ecosystem.
100%.
Yes, Lightning, but then you have the state channels. So we need to be making sure that we are in the correct channel. There's a lot of protocols right now, Botanix, Babylon, Stacks, whatever there is, that is being designed in Bitcoin. But it doesn't feel like it's getting the same attention and activity from user perspective as on Ethereum or Solana. You know what kind of reason there?
Yeah,
Is it just behind or?
It's a great question. So
I do a lot of trades every single day, and I share that on social media. And across our funds, we are also doing more than 2,000 trades per month. When you operate at that frequency, you want to have a partner that is reliable, because if execution lacks, you will notice it and it will cost you money. Therefore, I've been paying attention to OKX as they have been introducing spot margin trading here in Europe, which is technically that you can use leverage. And in my opinion, I'm going to use leverage for my delta neutral strategies, volatility strategies, where I can trade both sides. And you can also hedge your position if you're looking to be having an allocation in Bitcoin and ETH, and if you expect the markets to go down. Used properly, leverage can become a tool instead of a risk, especially, as I said, with hedging and volatility-based strategies. Go to the link in the description beneath, which is okx.com/cryptomichael, and make sure to become part of OKX and start using leverage as a tool instead of risk.
So what I observed in the Ethereum DeFi summer was, for that ecosystem to blossom, speculative fervor had to occur. We haven't seen retail really come back this cycle en masse. A prerequisite for Bitcoin DeFi summer to happen eventually would be for the market to be highly speculative, where Bitcoin's at like 200K, Ethereum's and Solana are finally doing their thing, and they're trading as a higher beta Bitcoin. their DeFi ecosystems really start to flourish because theirs are also languishing during this bear market too. Or not bear market, but like sideways chop. It's funny, yeah. I gotta catch
feels
myself.
like a bear market.
Yeah, I know, right? Energy-wise, yeah.
Yeah.
So when that happens, what I noticed is like, with each protocol issuing their own token, they can use that token to incentivize users to come to their chain. So if that speculative fervor occurs with Bitcoin L2s, they can take their native token, offer new users incentives to try out the dApps there, and the dApps can as well. And that's the virtuous flywheel effect that brought about Ethereum DeFi summer. And so until that happens, it's a bootstrapping problem. And I just don't think without retail there, it's just sort of this ecosystem is going to be chopping sideways. So yeah, why hasn't Bitcoin DeFi taken off as much as Ethereum DeFi or Solana? It's further behind, and we haven't seen retail come back in mass. And so, yeah, a lot of the performance on Ethereum DeFi and Solana DeFi is quite low compared to the bull run, the last bull run.
All activity is quite non-existent compared to outside of specific DEXs or prediction markets or anything in that aspect that has been picking up momentum. In terms of building Bitcoin DeFi, I think you became an advisor for Starkware.
I did, yes.
Why so?
So Ellie and team are really, really sharp. Have you ever met Ellie?
No, but what I understood from the entire team and the protocol is that there is at least some critical feedback on social media when it comes to the entire team.
Yeah, well, so Ellie and Zuko basically co-founded Zcash. Ellie's a brilliant, professor style. He's basically a professor who came up with, zero knowledge proofs with Zuko, which is incredible. Huge privacy encryption sort of intersection for those who don't know what that means. And so with Starknet, you wanted to use ZK technology to kind of superpower an L2, to use that tech to build a different type of Ethereum L2. I got involved because they also recognized that Bitcoin ecosystem was untapped, that there was a lot of activity in Bitcoin being not just the biggest crypto asset, but bigger than everything else combined. They were like, how do we tap into this ecosystem? Given that I had been investing and advising Bitcoin L2s before, I was a natural fit to help them kind of think about brand positioning, how to come into this market. And so I think it's a really good representation. And by the way, when Starknet and I started to work together, Bitcoin L2s had a bit of a bad reputation, that these were quick cash grabs, that they weren't real.
Not native Bitcoin, blah, blah,
yeah,
blah.
not native, or like, this is bullshit. Can it actually work?
Yeah.
I think Starknet was a great validation that Bitcoin L2s are legitimate and that, they're an Ethereum L2 looking how to support Bitcoin. That's incredible. Like, I think that's a testament to Bitcoin DeFi becoming even bigger. And so to help them on that was a great journey. I love working with the team. Ellie and those folks are super professional. I've been in crypto for 13 years. Yeah. There's a lot of B and C players in this space, and the Starknet team is a bunch of A players, really sharp, fun to work with. I like their style. I like their strategies and how they approach things. So to help them with their brand positioning and strategy was a lot of fun.
I mean, as I said, I haven't looked as much in Starknet as I maybe should. But the difference between, hey, price goes down, social media is bad, but project is great, is pretty big. And I think building a token and tokenomics and building a project and tech are two different things. I think Starknet has been pushed back a little bit based on the valuations that they went live on or raised. But probably in the future, they'll come back in the sense that they connect Bitcoin with Ethereum. And we don't know which one is going to be the biggest player doing that.
Right.
But at least betting on the best teams, in your opinion, is probably the right strategy.
Yeah, we've bet on a lot of teams. We don't think it's going to be a winner-take-all. L2s on Ethereum wasn't a winner-take-all. So, with asymmetric, the portfolio we have, and my personal portfolio, which is overlaps somewhat just because I was deploying into Bitcoin L2s before I started the asymmetric Bitcoin DeFi venture fund. We believe in smart, driven founders who are going to, pound their head against a brick wall until it turns into dust to make it happen. Startups are shitty and gritty. I've done two myself. It's not fun. So we look for talented, smart founders who have grit. And we look for a good go-to-market strategy. And then, of course, the technical stack matters, but we view that since everything's open source, we kind of view the technical stack as like important. But what I've learned in my experience in crypto is that marketing is a huge component.
Yeah.
So which teams are really good about their go-to-market, like marketing strategy. But we bet on a lot of founders. We don't think it's going to be a winner take all. We think it's going to be a bunch of winners. So for us, we invest in smart founders, and I love all my children equally. So we enthusiastically watch and help where we can. And I think we're going to see in the future. I think we're going to see a Bitcoin L2 at least at $100 billion valuation. I mean, when we look at Bitcoin L2s as a percentage of Bitcoin's market cap, it's tiny compared to Ethereum L2s as a percentage of Ethereum's market cap. If Bitcoin ever hits $10, $20 trillion valuation in terms of total market cap, it'd be crazy to think of a Bitcoin L2 not being worth $100 billion worth of activity. So we kind of view this as some people will just go, oh, what, that's a crazy number. And it's actually quite reasonable when you look at Bitcoin's existing market cap and future market cap. So for us, we're betting on a winner of that size, but we think there'll be multiple. So there's not going to be one.
Yeah, well, I'm a VC myself, and I think it starts primarily by investing in a team, and the rest comes after that.
100%.
If you don't believe in the guy building it, then there's no reason to invest in it.
Of course.
Recently, we haven't touched upon that. We saw a big takeoff of Zcash.
Oh, yeah.
Dash, Zcash. I don't know what the thesis or narrative is, but there seems to be some sort of Bitcoin narrative attached to it, or at least
A lot to unpack there, but quick hit takes. It's usually price thin narrative.
Yeah, correct.
Right? Like, why did Zcash pump? Everyone's like, oh, I rediscovered Zcash. It's an amazing technology. And it's like, it was there the whole time.
Yes.
You can tell a lot of OGs are pumping the price because they bought some bags of it. And it's a hot narrative right now. And they're looking for anything to pump. I'm like, cool. When did, some of these folks have 500,000 Twitter followers. And I'm like, yeah, cool. When was the last time you tweeted about Zcash? Before 6 months ago.
Yeah.
Crickets for years. So a lot of people, it's a reflexive thing. Price goes higher. People keep talking about, oh, the Zcash thing is amazing. And so that's what we're seeing right now. Same with other privacy coins like Monero and a few others have gone up as well. Long term, Zcash was dead. That's where, and in 3 years, no one's going to talk about it again. Unfortunately, look, privacy coins are a cool idea. I like the concept. I'm huge about privacy. I get that. They're competing to be an alternative Bitcoin, and they're never going to win that. So long term, they're going to trend to zero against Bitcoin. So I can't in good conscience ever recommend someone buy that. And then also, there are core. What I really don't like about the privacy coin folks, like Zcash and Monero people, and I used to instantly block them because of this, is dishonest debating styles, where they would try to undermine people's confidence in Bitcoin to pump their own coin. And I find that a really big breach of ethics. And so I used to hide and block anyone who said that in my comments. If we want to have a debate of why Zcash is cool, happy to. But to go into my comments and be like, Zcash is Bitcoin 2.0, Bitcoin's flawed, that's dishonest, and I'm just not going to have any of that. So unfortunately, a lot of their community is really leaning hard like that, saying that like, oh, Zcash is what Bitcoin is meant to be, Bitcoin's flawed. There's an extremely nuanced take about privacy, which is that privacy, I agree, is a cool thing to have, but it's not a need to have when it comes to a new money. A new money has to have a credible monetary policy. That is the most important thing. The Ethereum team has changed their monetary policy multiple times, which makes it semi-analogous to fiat currency. Instead of suits in a room, it's devs. How's it any different than fiat currency? And they'll argue, well, it's principled and everything else. That's a huge can of worms politically and game theoretically. Bitcoin has never changed its monetary policy ever. It's the most credible monetary policy on the planet. That's why Bitcoin will continue to accrue value, because over time, trust is built, and human beings will need trust. And people will be like, I believe that it'll be a 21 million hard cap, and that's self-fulfilling. If people believe it, price goes higher, people get more trust in it, et cetera, et cetera. Zcash and Monero have had inflation bugs. Now, before these trolls in the comments call out that Bitcoin did too, Bitcoin had an inflation bug before Bitcoin was worth a penny in its developmental era. And since Bitcoin's transparent, it was discovered immediately and fixed. And so when we look at Zcash and Monero, they're less audited and less looked at than Bitcoin because Bitcoin is the most popular crypto asset out there, like less than Bitcoin and Ethereum. And then when you look at, they have had inflation bugs occur. And since they're privacy oriented, it's harder to detect them. Now, again, they'll call out, oh, there are ways to detect inflation bugs. Yes. With a caveat of maybe. Like we have figured like there's turnstiles in Zcash. Sure. But we're still talking about a game theory that's pretty scary. And I wouldn't want my base layer asset, my L1, my digital gold, to potentially have an undiscovered inflation bug, which would destroy the value prop of having this money. I think, Lightning is semi-private. You've got coin joins on Bitcoin where you can mix your coins together. On Bitcoin layer 2s, you can have full privacy with ZK technology, et cetera. For example, on Liquid, since Liquid's been around, they have confidential transactions, a very, very private way of transacting. So Bitcoin L2s can give you the stuff that you've always wanted. DEXs, yield farming, lending, borrowing, privacy, et cetera. Just the Bitcoin base layer, I think, introducing either that smart contracting capability or that privacy tech could undermine its original and most important value, which is being digital gold. So I don't think that's worth the compromise or trade.
I think people also misunderstand what privacy might bring and also might lose compared to Bitcoin. I think being fully private blocks the way of checking if everything is in the right direction or whether there's not a malfunction anywhere or whatever happens. And right now the privacy topic becomes bigger and bigger because institutions want to have privacy and also retail traders want to have privacy, but then basically blocked or through CK make it private for yourself, but others could check if they want to. Account abstraction, all those things.
Right.
But that is not fully private. That is just not going to be compliant at all. Looking forward for 2026, what is a non-obvious trend you might expect occur in 2026?
Well, that's a fun question. Something different. Yeah. Non-obvious trend. Well, Bitcoin DeFi is still a non-obvious trade.
That's actually true.
I'm still ringing the Bitcoin DeFi bell, but it's not many people that are. So I am talking my book, but I have been talking about Bitcoin DeFi since 2021. So pretty early before the category even was semi-popular, and now it's not popular, but it's talked about.
Yeah.
I still think Bitcoin DeFi is an underappreciated sector, and we're still actively deploying our fund into it. So for me, that's probably the biggest opportunity because Bitcoin, its market capitalization is bigger than everything else combined. If we unlock DeFi on top of that, that'll be huge. I'll throw out a fun one that's probably not expecting just for things that are interesting. And it's purely, and I'm not recommending that people buy this. I'm just saying it's interesting. DeSci.
Oh, nice. Haven't heard this for a few months.
Right. This is.
I think last year or so it became a little
blip of popularity. Yeah. Again, I'm not recommending that people buy this. I'm just talking about narratives that are under the radar that I think might become bigger narratives. As a marketer in this space, I've seen so many narratives come and go. I actually wrote a piece on this called Quantum Narratives in 2019. I encourage you to go look at it because in there, DeFi isn't even a term yet for Ethereum. That term wasn't even coined yet by 2019.
What was it called back in the day?
Radical markets. There was a bunch of other ones too. Yeah, I know, right? Which is kind of weird. It's a flashback where you're like, whoa. Narratives just for like Ethereum and Bitcoin alone have kind of come and gone. Narratives of other asset types or categories in the space have come and gone. DeSci is something fresh and interesting where it's like you can tokenize patents or something like that or tokenize research and people can participate. TLDR, it's like participation in owning parts of science. which if people are going to speculate on trash meme coins and stuff, at least if they speculated on science, seems a little bit more interesting. So again, I'm not recommending that you do. I think it's an underappreciated narrative because I think retail really like it because it's like, oh, you can buy part of science. What's the TAM of science? Infinity. So I think we could see a little cycle happen there. And so, yeah, I mean, but I'm not like recommending that people buy it or anything like that. So
It's one of the narratives that we looked at, I think, a year ago when there was that slight bleep that we were like, this is interesting, but do you need to have a public token for most of these DeFi projects? That's the question. Like, I do see the future use case for it, but then more of like an integrated private blockchain that's using a token that makes more sense. But we'll see.
Yeah, agreed. Yeah.
In the beginning, you were talking about game theory and also the way of thinking when it comes to markets. So I run off with the question, what are you usually reading or listening to that, well, increases your own like intellectual sense or improves yourself?
Yeah, I mean, you've got a foundation of economics, right? Which would be Hayek and Austrian economics folks. So like any of those sort of books sets a foundation for how do free markets work? Why should we remove as much regulation as possible? And why that's good for society. So at a base level, it's Austrian economics. On top of that, you've got market structure. So some of that I found out through my experience at Kraken and just through looking at how DeFi protocols work. Like, what are options? What are futures? So how does trading work with order books? How does liquidity work? What is a price? The price of an asset represents all available knowledge currently. It's baked into the price. But there's some, some of that's from practice. Then there's the layer on top of that, which is investing. So what assets do you hold and why and long term? You've got some really interesting thoughts from like Morgan Housel, who wrote The Psychology of Money. It's a really great book around just money as a first principles thinking. So for example, he talks about investing practically versus investing rationally. I've invested pretty rationally, with my net worth being 99% Bitcoin until about 2021. Then I sold some Kraken equity, et cetera. That is not for the faint of heart. As a guy in his 20s and 30s, like, I think someone older might have had a heart attack. Like, I've seen my net worth drop 85% 3 times, like, because I'm holding Bitcoin throughout the cycle. That's not meant for most people. That's fucking awful for most people.
Yeah.
Investing practically would be like, let's say you're older and you can't stomach volatility like that. You put what you can, knowing that if you put any more, it'd make you sick. Like, if it makes you sick the whole time and you're stressed and you waited 13 years, but you had a horrible time doing it, it could have taken a physical toll on your body that's really damaging. So investing rationally, yeah, you would have made the maximum profit margin or maximum profit on the trade, but you would have sacrificed your mental health. So Morgan Housel's book, The Psychology, when he delves into that, which is really good. You've got books like, and given my privileged as in I held on this long and have done well in life. There's other books like Die with Zero. Die with Zero talks about, cool, you've made wealth, now what? So you got this thing, this money thing. What's this money thing useful for? There's another book called Your Money or Your Life, which talks about like money as a life force. You can like use money as like to buy you like lifetime, like sort of energy. It's like money is energy in a way. You can buy back time. You can buy back all these things. So, Die with Zero, I think, had some interesting sort of thought processes. One that I sort of took and created a derivative of is that your net worth is inversely proportional to your lifespan. So if you hodl forever, your net worth is going to exponentially increase. Compounding returns, was it like Einstein said it's like one of the craziest mathematical marvels.
Wonder, I think it is.
Yeah. Compounding returns are incredible, which means as you age, Yeah, the eighth, yeah. As you age, your net worth keeps compounding as long as you don't touch it. Unfortunately, your health is declining over time, and it usually kind of compounds in terms of how bad it gets. Your health from when you're 12 to 30 is pretty stable. You're pretty healthy. And I'm 37, and I didn't have any bad health scares, but like little things where it just starts to impact your life, and you're like, okay, I'm not going to live forever.
Mm-hmm.
And then you realize, man, these guys who have billions when they're 60, I bet they would trade everything to be me right now.
Yeah.
And they probably would, just to be semi-young again. I mean, 37, I'm not young, but I'm still young. Like they would trade anything to be me. They would trade anything to be 22. And so then you realize that, your net worth, while it's increasing exponentially over time, it's inversely proportional to your health. It's a very subjective area of how to think about spending it.
Mm-hmm.
And so Morgan Housel also came out with a book called The Art of Spending Money, which is quite good. It just came out 3 weeks ago.
Oh, really?
And I finished it. Really fun to kind of dissect and get into. Ways to think about, are you chasing status, or are you truly are you using money to make your stress lower? Are you using money to status signal? Are you actually wealthy? Mm-hmm. Some people on paper look wealthy, but their burn rate is crazy high. They might be worth $10 million, but their annual burn rate's $2 million. And their income right now is $2 million a year, so they can meet their burn rate. But as soon as that income drops and they keep that burn rate, boom, you start to really decrement from your net worth. Or, with your net worth, could you survive on that for the rest of time because your expenses are so low? That's true freedom. Mm-hmm. That's truly being wealthy. The other one is rich, which is just showing that you have money. Mm-hmm. Wealth is where you don't have to work again and you could live your life exactly how you live it now. So in different aspects of that have been interesting to delve into. Also, how to spend your money. Like some people hate nice dining. They're fine with hamburgers. Sure, go for it. Whatever. Maybe people don't like trips. They do like trips. Watches, don't like watches. Whatever it may be, right? Cars, etc. And the book is like, just go out and try spending your money on stuff and see what you like. And then if you figure out you hate it, cool. Mm-hmm. No worries. So books like that, and I know I'm going a little long-winded here on this answer, but I've kind of been going down this rabbit hole for the last couple of years. And then other things like The Middle Passage, which is about, as a middle-aged person, not middle-aged person, but someone going through their like 30s and 40s. This is what people often call their like midlife crisis. It's very
at some point it's going to be called young because we get like
right,
160 or so or whatever.
Well, you find this with people if they have a wife and kids, if they're successful, mm-hmm. like they have it all, right? Like that's supposedly what life is all about, mm-hmm. is that you're successful and you have your wife and kids. Your wife is hot, your kids are great. That's like you made it. But even those people go through this moment of realizing a lot of different kind of like breakthroughs around themselves, their mortality, what's the point of life. So The Middle Passage is an interesting delve into ego and how to identify your own ego and examine it, which is quite interesting. Mm-hmm. And so, there was a lot of, for me to make this much money too, you have to be, when you're really good at your job, it becomes part of your identity. And your self-fulfillment of like who I am as a person is that. Mm-hmm. And then you realize eventually you won't be important anymore. And then you got to figure out, well, who am I? And so there's been some interesting, I've been able to kind of pull out my ego from that identity, which is nice, to where it's sort of like, it feels like another level of self-actualization. Kind of getting deep for this
we
pod,
can go way deeper if you want, but
but so basically you've deconstructed base primitive level markets, how they work, how the economy works, investing, deeply philosophical takes on investing, mm-hmm. and then finally you did the thing, you made the money,
and now what?
And how to make a life of that, how to make it enjoyable.
I think that's a good list of books. Like I'm 32, so maybe I'll use some of yours to like be ahead of time in that sense. Got engaged a few weeks ago, so the first few steps are made.
Nice,
that's good. I started digging into some books myself, and I just got the book of Aristotle, one of his books.
Cool.
It's really cool, but it's A little bit deeper than the usual book that you read before you go to bed.
Yeah, I feel like I couldn't go to bed if I read that book at night.
Actually, I was reading it last night and I was like, oof, this is quite a lot. And you start thinking about it and you keep going on. It's great. But I think we need to round it off. Thanks for the insights. That was great, actually, about Bitcoin, the future of Bitcoin, the current state of Bitcoin. Where can people find you and what's next for you?
Well, it's quite simple. My name's Dan Held. So it's danheld.com. You can look at my blog where I wrote long-form pieces of content about how Bitcoin works. So if you want to learn the basics of Bitcoin's origin story and how it works, read Planting Bitcoin, or Proof of Work is Efficient is how Bitcoin mining works. Those two are my most popular articles. And then for my kind of my daily quick hit takes, follow me on Twitter at Dan Held. So pretty easy to find me both ways.
Cool. All the links will be in the description. Once again, thank you very much for coming to the office, coming to Amsterdam.
Thanks for having me.
Enjoy your stay here, and I'm sure we'll see each other again.
Well, Amsterdam's great.
Amsterdam is great, yeah. We'll see each other again. Thank you very much for joining.
See ya.